Charlie Gasparino joins me live right now with exclusive details on what both sides hope to achieve as a meeting of the financial minds. And I'm wondering if they'll be talking their book, Charlie.
Yeah, it'll be interesting because there's really not much they can do, Liz. We should point out that Citigroup is trading. If they didn't do they did a reverse split, as you know, they're really a $5.20 stock right now, which is kind of scary. Citigroup was one of the major banks that were decimated during the financial crisis. So, and it's not trading much above where it was during the financial crisis. I think it went as low as $2 back then. So that's an interesting. If you can get a longer chart, maybe a 10 or a 15-year chart, we could take a look at the Citigroup. It's just an interesting dynamic. They are trading at $52, but that's really $5.20. And, I think they're low during the financial crisis. There you go. Low during the financial crisis was like $2. That, just so you know, the $51.99 is not where there was a reverse split. They're trading almost at the levels that they were trading at during the financial crisis. So that tells you something how serious this is. Liz, I will say this: the banks are going down there. The banks are getting crushed, and the reason why they're getting crushed is not necessarily because of the coronavirus and the slowdown in GDP. That's affecting other stocks like airlines and you name it, travel stocks. They're getting crushed because of low interest rates. And, when interest rates go low, you just think about it. Banks charge less for their products. They charge less interest. It becomes much more, the banking services become much more of a commodity, and there's competition among the banks for your money, and they fight on price. That's why these stocks are going down. When you have interest rates where they are now and maybe going lower amid this panic, that's not good for financial stocks. I will say this: I'm not quite sure what the president is going to achieve with them, other than to say, I'm here with David Solomon. Jamie Dimon, as you know, is recuperating from heart surgery. He's not going to be there. I'm here with James Gorman from Morgan Stanley, and guess what? The banks are in good shape. So this is a panic that the banks are not going out of business.
What about the lenders, some of the banks that have major lending exposure to, say, for example, the shale drillers? I keep my eye on some of those names.
Yeah, that could be.
They're really getting
hammered. Banks always take losses on certain sectors, but we're not at the point now where it's like 2008. This is not.
Every sector.
It's not even close to that. The banks are well capitalized. It's a positive environment for banks, which is good generally for markets. So that doesn't mean we're out of this by any stretch of imagination. But I guess that's what they're going to do. The other thing I would say is, I'm hearing this. It sounds fantastical, but I am hearing this about the Fed coming in and buying stocks on an emergency basis. I hear this from traders and different people. Just so you know, they can't necessarily do that. The Fed's charter prevents it from buying stocks. It can buy bonds.
Well, did you hear that the Fed funds futures, I had the Fed funds futures, 100% chance of a 75 basis point cut.
Right, they can do that.
Next week.
They do that by buying short-term securities. That's how you manipulate the Fed funds rate and those other interest rates. So the Fed cannot buy stocks just yet. Congress would have to approve that. I kind of don't think they're going to go there. But anyway, again, we'll see what comes out of this Wednesday conference. My guess is it's going to be a lot of we're in good shape. The plumbing of the financial markets is fine. And, this is an overreaction. One thing I will say, Lloyd Blankfein put out a tweet today and said how, basically downplaying the whole coronavirus panic. And he may be right. But I just want you to know one other thing. During the financial crisis, Lloyd Blankfein consistently with others was saying when we were in 2007, way before the bad part of the crisis, that we're in the 7th inning of the credit crunch and that it was almost over. So take it from the source. When they tell you something is almost over, it might be, but they don't necessarily have a great track record.
Exactly. And as always, we know baseball games go beyond 9 innings. Charlie,
they do sometimes. You're right.
Charlie Gasparino, thank you very much.